Yo, what's going on YouTube? It's your boy Krusty back with another video, and as you guys can see, why am I so dark right now? As you guys can see by the title and thumbnail of this video, I'm going to be showing you guys my two personal risk management strategies that allowed me to become a profitable trader within the foreign exchange market. One of them being me trailing my stops at certain structural levels, and the other one being me taking partials at certain zones and then moving my stops soon afterwards just to get a little bit of profit off the table, leaving some runners within the trade, right? Before we get into the video, if you guys are brand new to the channel and would like to see more of this type of content, whether it involves me doing any live analysis, trading, all of that stuff, be sure to subscribe down below, turn on your post notifications so that way you guys are notified each and every single time that I do upload, and it also lets you know when I do go live and do any live trading live streams within the channel. Also, if this video did help you out in any way, shape, or form, be sure to drop a thumbs up so that way it motivates me to produce more content like this one alone, and drop any video ideas that you guys want to see that involves trading down below in the comments. But without further ado, I just want to record this intro on my camera right here in my living room. I don't know why it is so bright on the background, but I dig it, right? I dig it. Just a little bit of a change in scenery. But without any further ado, guys, I'm gonna go ahead and meet you guys on the computer, and I'm going to show you guys my two personal risk management strategy plans that allowed me to become a profitable trader in the Forex market. Alright guys, now that we are, let me move my mic. Hopefully you guys can hear me good. Audio should be good. Yep, alright, check. Cool. Now let's get straight into the actual breakdown of things, right? So let me just go up on my chart all the way up here, and I'm going to show you guys an example on GU soon afterwards. So one of the ways that I like to trail my stops is on structure levels, right? So any new higher high, any new higher low, so on and so forth, right? Market always, not always, but it tends to move in some sort of a structure like this drawn out, right? We got the new higher low, we got the new higher high. So let's just say we were to have taken an entry on price somewhere around this new structural level of higher high. We have all the confluences in the world to take the trade, whether it's some sort of a bullish engulfing, 38%, 50% fib retracement, all of that stuff, right? We're not going to get too much into that. We're here for more or less risk management, right? So we take a buy position right here, and I set my stop loss all the way down here, and my overall target is going to be my next psychological level, or I just don't have a take profit at all and I ride out the entire trend, right? Either or. Sometimes I'll have a take profit personally, sometimes I won't, and I'll just trail it to whatever price wants to go to, right, until I get knocked out. Now, price over here is constantly moving up. Sometimes it'll uptrend like this and make a huge move like this, a huge impulse, and sometimes it'll just move higher lows, higher highs, just like normal market structure as a whole like this, right? If I were to have taken this trade setup and have my stops down here, and let's just say I'm going to target a psychological level of 40, I want to say 1.4 thousand, but that's not a lot. But let's just say 40 to 4,800, right? Let's target this minor psychological level, and let's move this all the way up there. If I were to want to trail my stops, I'm going to want to move my stops on a new higher low structural level on any bullish market. If it was a bearish market, I'd want to move my stop loss below or above any structural level of a new lower high level, right? But since we are in a bullish market right now, I'm going to show you. Market is moving up. It makes its move. It probably smacks 1 TP within this general range right here, and it hits us a retracement, right? And what is this retracement right here? Some sort of a break and retest in structure, right? As you guys know, and if you guys have seen my videos for a while, I'm a break and retest trader, and that's the way that I like to trade, right? So price comes back down, gives us a new higher low, and we continue on with structure. What am I looking for to do right here? I'm looking to trail my stops below not only just that structural level of support that it created, but below that structural level of the lower high, right? Now, price continues to move on the trend. I'm riding out my full entire position. What does price do soon after? It breaks the next level of resistance right here, and it continues on, and it gives us a new break and retest. After we get a confirmation retest on this general structural point, I'm going to be looking to trail my stops again. But let's just say, for example, price were to break above the structural level and it wouldn't hold this level of resistance to then act as a new support. That's whenever I'll be looking to take any exits on the trade and just leave a few runners. So let's just say I'm scaled in 10 lots on a trade let's just say it was GU or something. I guess that's what we're on, GU. And price were to not maintain the structural level, what am I looking to do? I'm looking to take profits off the table because of the fact that if I have my stops all the way down here and price is all the way up here, I'd be pretty salty if price made this huge impulse move all the way up here and it were to stop me out all the way down here after making a 60 pip gain, right? So I want to knock off a little bit of profits off the table because the structural level couldn't hold. I'm going to close maybe 50% of my position, maybe 80% of my position, just depending on how confident I am with the setup. Like I said, I am very, very situational when it comes to the market structure and how biased I am, whether it's long on the US dollar, whether it's long on GBP USD, whatever bias I have, that's going to determine how much I take off the table. Typically, I like taking 50% off the table, and the steeper the retracement, the more I'll take off the table. But let's just say for this trade, I would take off 50% off the table, right? After price comes back down here. If this were to hold and make a new higher low right here, I'm going to then move my stops right here in this general structural level right here. Let's just say I never put this stop level right here because price never held, right? It came back down here. It's still holding the Fibonacci rules. It's still following the trend. I potentially could take another entry right here and risk the same amount of my trade, right? Maybe I can risk 0.5%, maybe I can scale in and risk 1%. It's all situational, right? But looking into this, then price moves up and it gives us a huge impulse to the upside. Notice how price then overall smacks our target. I took some trades off the table and I left some runners to continue on with the trend. That is one way that I like going about my trade setup. Now, if I was extremely confident within my trade, I would leave my entire position size and I would hold my stop loss all the way down here until the next new structural lower high. And this is a trade that I have to accept the fact that if price were to maintain or come all the way down to my stop loss, I would not be salty at all. I would accept the fact that I got stopped out in profit and still be happy with the outcome of that trade, right? But if you're not, definitely that's a situational type of thing that you want to take some profits off the table. Now, price were that to hold the structural level, I'm going to move my stops right here, and then we just continue on with the trend. If I want to do from candle to candle, I'd move my stops right here, then to the next candle, 30-minute candle, boom, then we get another 30-minute candle, boom, so on and so forth. Since I am a swing trader, I personally like trailing my stops between, I want to say, the 30-minute if there is a huge dump or impulse or some sort of a news or something. And if it's continuation in trend, I like looking for the 4-hour candlesticks, and every single 4-hour candlestick, I'll typically trail my stop each and every single one. Whether it's a bull market, every single new 4-hour candlestick, I'll trail it to the very low of that 4-hour candle. If it's to the downtrend, I'll obviously do the same exact thing, right? Now, this is trailing stops. If I wanted to take partials and I wanted to be a little bit more aggressive with my trade setup, let's just say price was moving like this, we were in some sort of a range, and then price were to slowly start breaking out like this, but we get a little bit of a liquidity grab all the way down here and continue on with the trade. We were to get in on this new higher low structural level, right? And I set my stops right down below some sort of whatever candlestick variation it gives me. Let's just say right there. And I want to target typically my 1-to-1. My 1-to-1 is my aggressive exit strategy that I like taking. If I were to risk 2% on this trade, and if I were to cut half, I get 1%, right? I knock off 1% off the table. I'm cool with it, and I move my stops to break even. No matter if there's a new structural lower high or lower low, I will move my stops to break even and take off half of my trade off the table. And it's only half the trade because I obviously still want to leave runners all the way up to the upside or to the downside, whether it is in a bullish market structure or in a bearish market structure, right? So let's just say we hit our 1-to-1. I move my stops to break even. Notice how price comes back down, hits our break even, and then comes all the way down here, does some sort of a liquidity grab, and continues all the way up. If I never moved my stops right here on this trade and I held it down here and I wanted to hold my entire position to the moon, and guys, keep in mind, let's just say this is an aggressive entry on a trade, I would have just lost my 1% that I risk or my 2% that I risk after price already gave me 1%, almost 2% gain right off the rip, knowingly that it was a aggressive entry. Why do I want to take profit, or why do I want to leave profits on the table if price basically winning my way after an aggressive entry, right? This is more or less some sort of a passive strategy that I like using when I'm really confident with my trade. Like I said, this is whenever I leave my full position and trail my stops from structure to structure or candle to candle. This is more of an aggressive trade setup type of risk management plan that I have. Now, if I were to get stopped out at break even, cool. I had 0.5% already knocked off the table. I already had 1% knocked off the table. So that is basically the first way. This is the passive way of trailing your stops. This is the more aggressive way. Soon after, if price were to, let's just say, continue on with the trend and it doesn't stop you out, I will still continue to move my stops with structure. So let's just say we are holding 0.5% of my position left. I'm literally just doing the same exact thing. I'm trailing my stops to the next lower high. I'm trailing my stops to the next lower high. And then if price were to basically impulse extremely hard like this on some sort of a news catalyst, I'm looking to use every single candlestick as a new stop loss point and then trail that way. This is a much more aggressive way to trail your stops. This is a much more passive way from structure to structure. And this overall as a whole is pretty passive in my eyes. But if you're a very aggressive trader, this is typically one thing I would recommend is, excuse me, I'm about to burp. Excuse me. Is if you're an aggressive trader, taking 50% off the table and moving your stops to break even at every situational point where your entry is aggressive. If you're passive, you're extremely confident with your trade setup, I see no reason why you wouldn't want to just trail your stops and obviously maximize your profits. Now, let's look at real examples down here. Obviously, these are previous study charts or previous study, I guess, history charts. It could be a little bit of a different scenario in lifetime, but let me just go ahead and show you guys a huge trade setup that I did take with GU. Oh gosh, delete. I would do the remove drawing tool, but I have some markups already on this chart, as you guys can see, that I don't want to get rid of. But this is a huge move that I caught right here, and this is a trade setup that I did trail my stops on. I will show you guys and talk about it here in a little bit. But let's just say right here, for example, situational. I were to want to take a buy after this huge nut to the downside, and I want to catch a little bit of a counter trend trade. What am I looking for? Number one, let's just say I were to actually analyze the market. I'd be looking for a new high or low. I'd be looking for some sort of a fib long. I'd be looking for some sort of a candlestick variation and some sort of an SMA crossover. That's 4 confluences, right? I don't take an entry on any single trade unless I have 4 confluences. Now, let's just say we wanted to take entry right here, right? Let's get our replay tool right all the way back here. And let's just say I wanted to take it on this bullish engulfing candlestick. What am I doing? I'm taking my long position right up there, setting my stops down below structural level, and I want to target my next psychological level. This is the way that I like to trade. I like to target psychological level to psychological level. So in terms of GU, it's every 200 pips. The 1.35 thousand, the 1.325 thousand, wait, 1.32. 1.32500. I got the numbers mixed up. 1.32500, 1.3 thousand, 30,000, so on and so forth, right? Every single split of psychological level, big, huge psychological level is 250. Now, we're in this trade setup, a little bit of retracement, pretty confident, cool. We go up, we go up, we go up, we go up. We hit zone 1 right here, but price is showing heavy signs of momentum. Why do I want to take partials or anything at all when we're getting Maribozu candlesticks to the upside, right? We're looking for a retest of this structural level of resistance to then act as a support. Price comes back down. We see some sort of a rejection, and I'm looking for another candlestick and some sort of a confirmation. Boom, we get the confirmation. We get some sort of a bullish engulfing right there. Ate up this candlestick, almost eats up this candlestick. Very minimal upside wickage, right? I'm trailing my stops. I'm moving my stops right down there below structure and also below the candlestick variation, and now we continue on. Will she continue to run up? No, she doesn't. So we get stopped out right here. How much profit does that leave us? It makes us about a 1 to 5% risk to reward ratio. Now, if I were to get rid of this, let's see what price would have done soon after. Couldn't hold, retested it as a resistance, and comes back down. And notice how price comes all the way back down there. Almost taps our stop loss. If you're the type of trader to have moved your stop loss, that I don't know why I brain farted. Move your stop loss to break even right here. You would have gotten break even after you basically made 2% and market gave you 2%. I would be pretty salty if I made 2% on a $200,000 account and price came back down and stopped me at break even. That's happened to me a few times. It has. So on aggressive setups like this is whenever I like to trail my stops, because worst case scenario, I get stopped out 1%, 1.5% in profit. If I'm trading a $100,000 account and I get stopped out at 1%, I just made $1,000. Why would I want to get salty after getting stopped out at $1,000? $1,000 that the market gave me, right? I would be salty if the market gave me $1,500 and I got stopped out at break even. I'd be like, what the frick? right? So why would I want to give that money back to the market? That's why you trail stops, right? That's why it's very good to have a risk management plan, and you have to follow it very strictly. Like I said, more or less, I trail my stops. I don't typically take partials, but if I want to, that is my aggressive way of taking profits, right? Now, we are looking for buys. Price is still holding this level as some sort of a support, right? Come back down, we get a retracement. Not really any confirmation. We get a huge gap to the downside. Let's see what price is doing soon after. Maybe I want to take buys right here. We get a new higher low. We get some sort of wicked rejection. Let's just say we were to buy it right there, stops right down below there, and then target all the way up to my psychological level again. We can either get stopped out. I completely forgot what the price looks like right here. Boom. We get a little bit of a huge impulse to the upside. I can definitely move my stops right here because notice how price did close above the previous bodies of this candlestick right here. If price were to basically break this structural level, not only would it be breaking my SMAs, but obviously it'd break this low. So I want to trail my stops right here, right? That's the perfect fib entry if I wanted to take a fib entry. We're getting multiple rejections to the upside. This is whenever I could decide to basically cut my entire trade and potentially just leave a runner, right? If I am pretty confident with the trade setup and it could reverse right here, notice how this is a structural level historically of resistance. This is whenever I'd be looking to scale out, right? I could take 50% off the table. I could be looking to take 80% off the table and literally just leaving a runner. So if price were to break out of this range, then obviously we're still going to be able to maximize our profits. If it's not going to be able to break out this range, I don't want to get stopped out. I break even after it just gave me almost 3%, right? Notice how price comes back down, retraces, and I get stopped out right here on my trailed stops. I got stopped out with a runner at trailed stops. So I still got stopped out in profit. Why would I get salty over that? I not only just scaled out of my trade at this huge structural level of resistance historically, but I left a runner. And it could have potentially made me some more money, but it didn't, obviously, right? We got stopped out. Let's see what price would have done soon after. It's still holding as a resistance. Still holding as a resistance. Still holding as a resistance. If price were to, if I wanted to be greedy and continue to hold my stops all the way down here or even break even, notice how it would have gotten stopped out, break even right there. I would have been salty after price basically showed me so many indications that it was struggling to break out of that zone, right? Now, looking at where price is at now, since it's been maintaining that structural level, maybe I want to be looking for shorts now, right? Let's see what price does. I want to see some sort of a retracement, hold as a resistance. Couldn't hold it as a resistance. We get some sort of an inverted head and shoulders. Now let's see if we can get another entry up here and see if we can obviously take it, right? So, we could potentially take a buy right here. Let's just say Morningstar variation. Like I said, I don't remember what price is doing right here. Remember, this is historically a level of support. If I wanted to target all the way up here to my psychological level, boom. Very aggressive entry. Let's see if we took our 1-to-1 at least. We didn't even hit our 1-to-1, right? So this would have been a loss in our books. It's completely fine. Back testing. Now we continue on. We continue on. Continue on. It looks like we're starting to wedge to the downside. Yes, obviously it's going to sell right here because this is the position that I took. But circumstantially, let me show you guys how I went about this trade setup. So we're holding as resistance. I see my perfect various variation candlestick. We're holding this level as a resistance, and boom, soon after price literally just tends to melt. After I got this structural level of break and support now acting as a resistance, I'm trailing my stops right here. After price continued on all the way down to here, notice how my major psychological level was right here at 1.32. I noticed there was so much momentum within the trade that I wanted to continue to trail my stops all the way down to here, and then I started seeing some sort of a struggle within the 5 minutes to basically come down below this general area. So what did I do? I literally just moved my stops. Where was it? It was somewhere right here. I saw this sort of tweezer bottom variation. This is whenever I decided to actually take out of my trade setup. It was around 5:30. 5:30. So it was right around this general area where I decided to take out of my trade. Obviously, price could have ran me up just a little bit more, but notice how this is a very strong psychological level historically on the daily. Why do I want to risk obviously take or continuing to hold the trade right here? We have a very strong level of resistance, very strong level of support, right? So if it is a very strong level of resistance or support, I'm taking out. I'm taking out. If I want to get back in onto the trend, I'm literally just looking for some sort of a break and retest while already having runners in play, right? Because I could care less if a runner gets stopped out somewhere at my trailed stops because of the fact that I want to squeeze just a little bit more profits, right? But hopefully you guys got the entire message out of this trade setup. This risk management video. If you guys want to take aggressive entries, be sure to take aggressive exits. If you guys are taking passive entries, be sure to take a little bit of passive exits as a whole, right? But hopefully I hope this video made sense. If you guys have any questions at all, please be sure to reach out to me on Instagram. Each and every single trade that I do call out, I call out in my Learn and Earn group if you guys want to be a part of this. I started off a $200,000 account challenge at the beginning of this week. Already passed it, as you guys can see right here, 10% made. Scrolling up through the chat, this is our entire week of the first week of March. Absolutely fucking slaughtered the markets. Looking into this, silver literally made us all 300 plus pips. Obviously, as you guys can see right here, I drop breakdowns for each and every single trade that I do take. I don't just send out the signal and then just let you guys be. I literally show you guys why I'm taking the entry, so you're literally learning while you're earning within this signal room. We got a gold breakdown. We have another, where's the GJ one? GJ right here, AU right here. I'd send a breakdown for each and every single I just brain farted again. I'm literally losing. I'm so tired. Trade idea video for every single signal, right? But anyways, I'm about to knock out. I need a nap. I literally have not slept all night. If you guys want to be a part of that, be sure to check out the link down below. And also, aside from that, if you guys did enjoy this video and it did help you out in any way, shape, or form, be sure to leave a thumbs up and subscribe to see more future content related to this one alone. And if you guys have any video ideas, be sure to comment it down below. But appreciate you guys watching the entire video. I hope to see you guys extremely soon. Happy trading. Risk management, please follow this. And I can almost guarantee you that you will become a profitable trader. Like I said before, if you guys have any questions, any doubts, any concerns at all, please comment down below. Reach out to me on Instagram. Literally spam me until I respond. But I will see you guys in the next one. Happy trading. Let's get some money. Peace.